Welcome back to Investing with Confidence, sponsored by Online Trading Academy. If you're just tuning in, Al was shedding some light on FedEx. You know, how FedEx has been moving on the year, some of the different opportunities. We talked about waiting for an entry point, waiting for price to come down to a wholesale area. And that's how we buy and sell everything in our everyday life. We want to buy stocks in the market the same way we look at buying clothing or even food or whatever that may be. I mentioned the comment when I buy my Jordan shoes, I want to buy them on sale. Same thing in the financial markets. And we talk about that in these investing classes, how to have a strategy to make smart investing decisions and hopefully be buying at wholesale and selling at retail within your stocks, options, futures, or your Forex accounts. If you happen to miss 2 tickets for that investing class and the stock picks, the free stock picks that we're giving away here this week, call 952-814-4410. That's 952-814-4410. Or you can go online to our website and register there. Just go to otamin.com. That's otaminn.com. Al, we're going to continue this discussion about some of these other stocks. Some of these, you know, we talked about at the beginning of the show here. There's gurus out there just recommending stocks for really no particular reason, no regards to price. So let's analyze these stocks a little bit and see what they've done the past year, see what the potentials could be moving forward. The next stock we're going to talk about, this is a tough one to say. It's Truist Financial. The ticker symbol is TFC. And this is a former merger of a bank, BB&T and SunTrust. Right. And the merger created the 6th largest bank holding company in the U.S. by assets and deposits. Okay. Right. Now, just looking at the chart here real quick, and this is just for our YouTube listeners as well. By the way, you can also find Investing with Confidence on YouTube by just searching Investing with Confidence. But this TFC ticker symbol, let's see here. In 2021, it had about a 32% of growth in 2021.
Yeah. That's in a short period of time. That's
1 year of growth, which is pretty darn good. And, and basically, this stock is at all-time highs. Now, if you think about this, if you buy stock at an all-time high, are you buying on sale or are you buying at a retail price?
You're buying at retail prices. You are buying high, which you all know you're not supposed to do.
Correct. So why don't you talk a little bit about this symbol here? I got some demand zones where I would say there might be a potential buyer sitting there. So why don't you just dissect this a little bit?
Yeah, let me comment on that buying high comment that we made also. Because when stocks go up and reach a new high, that doesn't mean that there isn't more growth to come. But what happens is that stocks always move in kind of a stair-step fashion. So there'll be a bit of a pullback where you can have a better opportunity to get into something that has a greater potential or probability of it continuing to move up. You know, as Josh mentioned, I think back in October and in January both, there were some two great demand zones that our strategy would have identified that would have allowed you to get in with a high degree of confidence that it's going to go in your favor, in your direction. One of the reasons that companies like this have done well is that we're in a rising inflation environment. And financial companies, banks especially, do very well in high interest rate environments.
Yeah, and that's happening now.
Exactly. Why is that? Well, for one thing, they still can borrow at low amounts and then charge their clients a much higher amount. So their profits typically go up during higher inflation environments.
Yeah, and when Al was talking about these 2 potential demand zones, they're based off two different time frames. So investors can have different time frames, but they're basically different time horizons based on how long they might want to be into the position. For instance, he was talking about one. It was a daily demand zone that had a potential there, right? And this is back from January. And then a weekly demand zone from October. So it's based off of a certain amount of time on a price chart, and that's how you want to make your decisions. So let's just say an investor wants to be, I guess, a little more active. You would maybe do a daily chart, and then you have a few more trades, maybe 1 or 2 a week or something like that. If you use a weekly chart, investors can be more longer term, not buy and hold, but longer term. So you have an entry point where you want to be a buyer, basically at wholesale when we're talking about demand.
Correct.
And then a potential area where we want to get out and be able to realize profits, because you can't just buy and hope things go up, and there's no strategy, and that doesn't bring you longevity in the markets.
No, and when Josh was talking about different time frame charts, when we're talking about a daily chart, we're looking at an indicator on a chart that shows the movement in price on a 1-day time period. If it's a 10-minute chart, it's the movement of price in a 10-minute time period. The reason that there are different time frames is that people have different objectives in the way that they want to trade. If you're looking for short-term income, you're going to use a shorter time frame chart. If you're looking at long-term, if you're an investor and you're only going to make maybe 1 or 2 investments a year, then maybe you will look at a longer-term time frame chart. We show you how to identify the right time frame for you, and to be honest with you, we'll probably show you in most cases how to use more than one time frame to really fine-tune your entry and your exit positions.
Yeah, it's really all about making smart investing decisions. And you actually brought up a great comment there about, we have people that are looking for income potential in the market. Strategy is designed for that. And when Al's talking about the different strategies for short-term income potential, you need to use the proper charts, the proper time frames, and make smart decisions based on where to get in, buying at wholesale, and selling at retail. Our investment strategy is called Core Strategy, and it's designed to follow the big banks, the institutions, because who moves the market, Al? It's the banks, the big money. We call it a lot of times the smart money. So we have to identify where they're buying and where they're selling. When we're talking about these supply zones or these demand zones, area of interest, we can call it, is where we're identifying where potential buyers of banks and institutions could be moving these markets. So we want to wait until price comes there, where we want to be a buyer, not just buy just because, and then sell it where we want to get out and realize a profit. So you have to have a strategy designed for that. If you want to learn more about that strategy, Online Trading Academy has investing classes right here in Bloomington. Al, you actually teach these. I teach these on the weekends. We sometimes do these in the evening as well.
We do.
But sometimes I go over time, so don't be worried about that. But, Al,
I'm not worried about it.
You have some fun with
because I do the same thing myself. But we just have so much to say, Josh.
It's funny because I always say to the crowd, is it okay if we go 5 or 10 minutes over? They're like, yeah, let's go 20 minutes over because they
keep talking.
It's pretty cool because they're eager to learn about the financial markets. Yeah. So I want to give away tickets for this investing class for callers 1 through 10. You got to call in right now. When you call in now, you're going to receive some stock picks that will get you as well. Call 952-814-4410. That's 952-814-4410. You can also go to our website online. Just go to otamin.com. That's otaminn.com. Al, I got one of the favorite ones here. I love to have my iWatch. I love my iPhone. I love my iMac. Let's talk about Apple.
Mm-hmm.
Apple is a stock that I think a lot of investors like. They know they want to be investors in it, but let's take a peek at it here. Sure. All-time highs with Apple roughly today, when we're doing this show, right around $175 per share. On the year from 2021, it was actually up 38%.
Right.
Great moves at this market. Why don't you talk about Apple?
Well, you know what? Apple is actually the most valuable company in the world by market capitalization. It occasionally hits that $3 trillion mark. Mm-hmm. Apple is a fantastic company. I mean, if I tried to put to come up with some negative things about it, I'd be hard pressed to find that. Even Warren Buffett feels the same way. He owns 887 million shares of Apple.
Think about that for a second. The big money holding big stocks.
Yeah, he owns 5% of that company. They have over $190 billion in cash. I think it's actually more than the U.S. Treasury has right now. One of the safest dividends out there. In fact, just with their current amount of cash and securities, they could pay their dividend for 5 years without bringing any additional cash in.
That being said, Al, really good things with Apple. Great things. We have all-time high prices. Is Apple at a retail price or is that a wholesale price?
Yeah, right now it's at wholesale prices. And again, there will be, and there always has been pullbacks. I mean, it went up to...
It's at retail prices right now.
Yeah. Did I say that the
wrong way? You said wholesale, yeah.
Okay.
It's at all-time highs, retail prices.
Yeah, so it's at all-time highs, and there will be a pullback. There will be an area where we find buyers that are just waiting for it to come down to that price. And we found that before, in this strategy that we've been talking about that this individual has, which is more of that long term. I think he would have gotten in at 100 and let's see,
about 170 or so.
In the 170 area, we found a demand zone below that in the 160s. Back in early or mid December, and then a supply zone at 176. you could have gotten in, you could have gotten out with some pretty decent profits there without just holding on to it. So if you're looking for short-term income, it means just what it says. It means you have to be able to access the profits on a short-term time frame basis.
And that can be based on, right in that time frame, you're probably talking about maybe a 15-minute chart, hourly chart. What's pretty cool about that is not everybody has the same zones. So when Al's talking about these zones, you might have a little bit different one than me, but your risk management and capital management is based on what you need. Right. Mine would be what I would need, just like any other investor.
Yeah,
which is great.
Everybody's a little different, and that's one of the things that we do. I think that's unique is that we craft or create a strategy and a plan for people based on them, based on what your objectives are, what your risk level is, and so forth. And there's a lot of strategies out there, but to find a successful strategy can take a lot of time, a lot of effort. You may never find it, but there is a shortcut. And that shortcut is to just follow somebody who has been very successful with a strategy and has a proven record of that success. That's what we do. We provide instructors that have used our core strategy. And these guys, a lot of them have worked on the floor of the exchanges, maybe trading options or futures, maybe hedge fund managers. Those are the guys that understand what moves price because they actually do it or have done it in their professional lives. And now they're teaching us. So, everybody makes mistakes. And the great thing is that you can eliminate a lot of those mistakes by listening to the people that have done it before, that can tell you what not to do and what to do.
Yeah, it's really about longevity in the markets. When Al is talking about some of our instructors, came from, some of them came from the floors of the exchanges, New York Stock Exchange, Chicago Mercantile Exchange, Chicago Board of Options, and they've been in the market for sometimes 10, 20, 30 years, and that's just like anything. It's having a mentor. Having somebody guide you through your investment decisions. And it's not just say, hey, go buy here and sell here. It's no, this is how we're going to be a buy, and this is why we might be a potential buyer. And that way you can make your own decision, but it's a smart decision. That helps bring consistency, but it also helps bring confidence. And Al was talking about these different supply and demand zones. See, I like to be a little bit longer term. I like these weekly zones and daily zones. Could price come down to $150 a share with Apple? It's possible. Sure. Would that be at a wholesale price? Yeah, that would be a great wholesale price. Right. Think about it. If you're going to go to the grocery store and you're going to look at, let's just say you buy a lot of ketchup, and you might need some ketchup coming up soon, but you're keeping an eye on the sales. That's kind of the same thing in the markets. Keep an eye on the stocks that you're looking at. Keep an eye and see when they go on sale. That is when it's time to be buyers. Yep. When they go to retail, maybe it's time to get rid of them.
Yep. And I don't want to get into a deep discussion of this, but just so you understand, there are also assets you can use along with the stock to actually increase the returns of that stock. But also, I talked about patience before, waiting for a price to come to you. With certain strategies that we teach our students, you can actually get paid cash to wait until the price comes to you.
Yeah, let's talk about that coming up here in the next section here. We're going to talk about different opportunities to have the potential to get paid to wait. So stay tuned here after the break. But Al, we're getting actually close to the break here, and we have people that want to learn more about a strategy to make smart investing decisions, how to utilize the market, buy at wholesale, sell at retail, just like the financial institutions do. So you need a strategy with strict rules and a plan. And that's what it's all about, knowing when to get in your positions, when to get out, and doing that before price actually comes there. What's great about our strategy is you place your investments onto a platform that's kind of like just where you go to do that, and the platform actually executes it for you. So you don't have to be at your computer for it to execute. So if you work during the day and if say someone is looking for income potential in the markets, well, you don't have to be at your computer for that to execute. So I want to give away 20 tickets here for callers 1 through 10. I'm going to give away 2 things here. 2 tickets for this investing class, but I'm also going to give away some stock picks, and it's actually walking you through why you might be a buyer, why you might be a seller, a visual, because I think a lot of our listeners are probably visual learners, exactly. And it's a hands-on type activity to learn how to make smart investing decisions. So I'm going to give that away as well, but you got to call right now. Call 952-814-4410. That's 952-814-4410. Coming up next, let's talk about that strategy that's designed to get paid to wait. Sure. Let's maybe even use that with Disney and maybe Ross Stores. Coming up next. Once again, for 2 tickets for the investing class, 952-814-4410. This is Josh and Al, Investing with Confidence. We'll be right back. Be a little more careful on you could have bought here and made money and stuff like that. We got to be. It's hard to do in this environment on how we're talking like this, but just be real careful. So we'll talk about Disney and Ross Streets.
Yeah, I didn't put anything together for Ross.
I got just look at the price.
All right.
That felt like the long segment, didn't it?
Yeah, well, it's longer than the first one.
Yeah, double. All right. Number 3, 1050. I'm having a hard time remembering what to say on the intros and stuff.
Mm-hmm.
All right, here we go.
In this segment, are we going to talk about retirement at all, or not?
Let's see what Disney's doing here first.
Yep.
Matter of fact, yes, Disney is down 14%, and we'll talk about what if you had Disney last year, you were down 14%. Well, there's strategies that in retirement accounts that whole time there's potential strategies to collect premiums, stuff like that. There's potentials to benefit in down markets. Make sure we're saying potential a lot because we're getting very close to
Okay, yeah.
getting our hand slapped.